Citibank, one of the largest banks in the world, just released a massive document detailing the tokenization of all real-world assets that they want to do using cryptocurrency. And well, certain cryptos like XRP and HBAR stand to benefit from this because they are very uniquely positioned in order to tokenize all of the assets that they detailed in this massive document. And I think because of this, trillions of dollars will be flooding into these cryptocurrencies.
Imagine a global bank so powerful that its decision to flip the switch on XRP sends shockwaves through the entire financial world. While the world debates crypto's future, banks aren't waiting around. They're leaping into distributed ledger technology with reckless abandon, and the Hong Kong Monetary Authority's jaw-dropping initiative is only the tip of the iceberg. But what really makes waves? Citibank, that's right. Citi just flipped the switch on XRP, and if you're not prepared, you're about to be left in the dust. So what's driving this seismic change? How are banks from Hong Kong to Germany gearing up to revolutionize everything from real estate, tokenization, to wholesale digital currencies? And why is Citibank leading this charge with XRP? Stay tuned as we peel back the layers and reveal how this isn't just another tech trend. It's a paradigm shift that's reshaping finance as we know it.
Crypto enthusiasts, this one's a game changer. Hong Kong is at it again. Today, the HKMA announced a groundbreaking partnership with the central banks of Brazil and Thailand for cross-border tokenization. This includes atomic settlement of digital assets and wholesale CBDCs. They're not stopping there. The HKMA is also offering grants up to HK$2, $5 million to boost digital bond issuances in Hong Kong. Remember their $750 million digital bond? Now they're aiming even higher. Brazil's Drex project and Thailand's Project San are joining forces with Hong Kong's Project Ensemble. Imagine seamless trade finance and carbon credit transactions across borders. Plus, the HKMA is now an associate member of the Linux Foundation Decentralized Trust working on CBDC interoperability. And the update on Project Ensemble Sandbox? Big names like JP Morgan, R3, and WeBank Technology Services are on board, with new use cases involving tokenized funds. All these announcements came from Hong Kong FinTech Week's keynotes.
Let's start with a headline that had everyone talking. The Hong Kong Monetary Authority just launched its supervisory incubator for distributed ledger technology. Now that in itself is mind-blowing. Imagine an entire government agency stepping in to guide banks on adopting DLT, a technology that isn't just efficient, it's a complete game changer. And why would they do that? Because sitting still is no longer an option in this high-speed digital era. I remember reading the announcement, banks must adopt or die. Not a metaphor, but a stark reality. And when you think about it, that's exactly what's happening. The traditional banking system is being forced to evolve, and the speed of change is nothing short of breathtaking.
Ripple Labs and Hong Kong's Fubon Bank team to offer property equity access to locals. Ripple Labs is working on a pilot program with Hong Kong's Fubon Bank to offer property equity access to residents. The developer of the XRP cryptocurrency revealed that the collaboration is a part of the EHKD pilot project. Ripple and Fubon Bank were selected to demonstrate a use case for the settlement of tokenized assets, it added. This is a very proud moment for the Ripple CBDC team and our partners. We've worked together on a proof of concept for hypothetical EHKD pilot program for HKMA to help realize home equity. https://t:/xv6uniasbp Mary C. Hall at Systems and Tech October 31, 2023. Under the proposed solution, the partners employ state-of-the-art technology to offer a home equity line of credit HELOC for citizens. The collective goal of the venture is to address the escalating demand for tokenized real estate equity. The HELOC pilot project also involves participation from 5 key players, including Hex Trust, Stratford Finance, CodeLab, BCW, and Toco.
Now, this isn't just about Hong Kong. Across the globe, banks are racing to integrate DLT into their systems. For example, in May 2023, Ripple made waves with its pilot program in Hong Kong, demonstrating tokenization using a new CBDC platform focused on retail use cases. Think tokenized real estate and equity releases. That pilot was a bold statement. Ripple was ready, and the authorities were listening. And then there's Fubon Bank. Not content with merely following suit, Fubon Bank announced plans to leverage the XRP ledger for real estate tokenization. It wasn't a rehash of old ideas. It was a fresh, innovative look at how high-value assets could be transferred securely and swiftly using blockchain technology. Imagine a future where purchasing property is as seamless as buying a smartphone. That's the promise, and the pressure of distributed ledger tech.
Fubon Bank has partnered with Ripple, a blockchain technology company, to explore solutions for real estate tokenization as part of the pilot program EHKD.
Fubon Bank's Zhu Luosheng stated they will conduct initial testing targeting clients seeking refunds. This will involve tokenizing mortgage rights and providing digital HKD loans using Ripple's technology. Clients can use digital HKD for various payments, and the main focus will be on individuals seeking mortgages. The bank will utilize Ripple's CBDC platform to digitize legitimate Hong Kong dollars at a 1-to-1 ratio, streamlining the loan application process with Fubon's EHKD e-wallet.
But why is all this relevant? Because beneath every headline, every pilot project, there's one constant theme. Banks are gearing up for a revolution. They're no longer satisfied with the old ways. And leading that charge? Citibank. Citi's recent announcement is the spark that could ignite a global financial transformation. For years, Ripple has been quietly cementing its reputation as the institutional powerhouse of blockchain. Whether through pilot programs, partnerships, or the steady integration of Ripple's custody and payments platforms, Ripple's technology has been the silent engine behind many of these experiments. And now, as Citibank flips the switch on XRP, that engine is roaring to life on a scale we haven't seen before. Banks are no longer just financial institutions. They're tech companies. They're betting on technologies that promise efficiency, transparency, and speed. And Ripple's XRP ledger stands out as the perfect bridge. Remember what David Schwartz said? XRP is asset neutral, meaning it can settle any two assets. That's a huge advantage when you're dealing with the complexities of tokenized assets or even traditional fiat currencies.
We have the rise of tokenization, and the headlines are back. Citi talks about the killer use case for blockchain, finally. Others talk about a $10 trillion market for real-world assets by 2030. Or another way to look at it is 50xing the size of the market in the next 7 years. So I think optimism is back, lessons have been learnt, but importantly, new organizations are trying new ways of applying the technology.
And XRP seizing the number 3 spot, displacing USD Tether, and we still don't know how the US government feels about it. And then we see this, XRP's market cap at $139.04 billion just flipped Citigroup. Yes, which also works with Ripple.
The transformation isn't isolated to one region. Over in Europe, DZ Bank, Germany's second largest bank, has been at the forefront of this shift. DZ Bank's secure custody solution for tokenized bonds and crypto assets, powered by Ripple's technology, demonstrates that even the titans of traditional finance recognize the necessity of adopting DLT. They're not just testing the waters, they're diving in head first. What's even more fascinating is the layered nature of this technological revolution. Think of it as a 3-phase paradigm shift. Initially, you transition your old systems onto new infrastructure. Then you transform how you deliver services, reimagining every transaction. Finally, you experience a full-blown paradigm shift, where the new way of doing business isn't just an upgrade, it's a complete reimagination of financial operations. That's what's happening now. Banks, whether in Hong Kong, Germany, or now with Citibank, are moving through these phases faster than ever before.
The DZ Bank is quite happy, and we're a bit proud that we're one of the first banks in Germany which really built and made their digital custody platform going live. We can serve our clients dealing with settlement and custody of digital assets, focusing on crypto securities according to the German securities law.
Beginning of 2023, we then decided that we should best work together with Ripple Custody.
The need of digital asset is just trying to find optimized processes and new products. And therefore we have to think about new technologies, and DLT and blockchain is one which can help us to serve our clients better.
Digital ledger technology aims at improving existing capital market processes. This is how we see distributed ledger technology. These two processes, distributed ledger as well as existing capital markets business, will coexist the next decades.
The hype around DLT isn't just noise. It creates the capacity for a fundamental shift. Once banks start to move from pilot to market-ready solutions, there's no turning back. And as more institutions embrace this transition, the ecosystem becomes self-sustaining. The more they adopt, the more essential these technologies become. It's a cycle that feeds on itself, driving rapid innovation and, inevitably, disruption. Let's delve a bit deeper. Consider the relationship between Ripple and regulatory bodies. Despite ongoing challenges, like the SEC lawsuit that has dogged Ripple for years, authorities around the world have taken note. In regions where the SEC's influence wanes, like Asia and parts of Europe, regulators see Ripple's compliance and technical prowess as a blueprint for the future. They're less interested in punitive measures and more focused on harnessing the potential of DLT to modernize their financial systems.
Reliability and security, I think, are extremely important, and I think you'll find that with our team of programmers, and we're focused on this use case that's just payments, that doesn't have a lot of bells and whistles. It's not a very complicated use case, and that means we can focus on keeping the ledger secure, reliable, and its predictable behavior. We want the ledger to work the same way tomorrow as it did today, and if we're just adding lots and lots of features, that imposes costs on all users. At a minimum, they have to make sure the new feature doesn't create risk for them. So we don't want to sort of rapidly evolve the technology. I think maybe Bitcoin has taken that to an extreme, and maybe some other technologies have evolved too quickly.
This is where the connection with Citibank becomes even more intriguing. Citi isn't a small player, it's a global financial juggernaut. Its decision to embrace XRP isn't a minor pivot, it's a resounding message to the entire industry. The future of banking is digital, and those who hesitate risk being left behind. And when you combine that with the backing of institutions like the Hong Kong Monetary Authority and DZ Bank, you begin to see a network of support forming around this new digital ecosystem. I remember when I first heard about banks experimenting with blockchain, it sounded like science fiction, but now it's a full-blown reality. From pilot programs in tokenizing real estate to the implementation of digital euro projects, every step is paving the way for a revolutionary shift.
Crypto fans, XRP fans, the Bank for International Settlements says this: central banks must roll up their sleeves and urgently speed up their work on their own digital currency before crypto upends the current financial system. So they're getting worried, and I tell you, they have good reason. But if you take a look down here, they say that there's years go before they're going to get it done, so they've got to really accelerate their development. So a warning to all those blueprint wannabe networks out there: if you're developing yours, you better speed up too. Because guess what? They're not going to wait on you. They're going to turn to the tried and true. And there is only one original. XRP is the one.
Yet the narrative isn't one-dimensional. Critics argue that these pilot programs are mere experiments, a phase before the real game begins. But history has shown that hesitation in the face of disruptive technology can be fatal. The old guard of finance once clung to outdated systems until they were rendered obsolete by innovations like online banking and mobile payments. Now, as the digital revolution accelerates, the same principle applies: adopt or risk irrelevance. There's also a fascinating human angle to this story. Behind every corporate announcement and technological breakthrough are the individuals who dared to challenge the status quo. Take the engineers and innovators at Ripple, who tirelessly refined the XRP ledger to meet the demands of institutional finance. They weren't content with the norm. They envisioned a system where money moves at the speed of thought, where transactions are seamless, secure, and borderless. Their vision is now being embraced by the likes of Citibank, turning what was once a futuristic dream into today's reality. And let's not forget the influence of external factors. Global economic pressures, regulatory changes, and the growing need for more agile financial systems have all contributed to this shift. As traditional banking models struggle to keep pace with technological advancements, institutions are forced to innovate or face obsolescence. The announcement from the Hong Kong Monetary Authority is a prime example. A bold move to bridge the gap between legacy systems and the digital future. And now Citibank's decision to flip the switch on XRP amplifies that message, proving that the momentum for change is unstoppable. But what does this mean for you, the everyday viewer? It means that the financial landscape is on the brink of a transformation that will affect how you manage your money, invest in assets, and even interact with your bank. Imagine a world where your transactions are processed instantly, where cross-border payments are no longer a hassle, and where the traditional boundaries between banks and technology companies blur into irrelevance. That's the promise of DLT and why this shift is so urgent. Prepare now or risk being left behind.
If enterprises use the XRP ledger just for payments, that's great. That's not a bad thing. But that's not going to bring their customers onto the XRP ledger. If they use the XRP ledger to launch tokenized loans, that's going to bring the people who are going to fund those loans and who want a return onto the ledger. That's the difference in the sort of institutional DeFi type of adoption and the traditional institutional adoption that we've seen. We really see that with stablecoins, right? A stablecoin is probably one of the most regulated products in the crypto space. If you look at companies like Circle, Tether, the forthcoming Ripple stablecoin, these are going to be heavily regulated products, right? Most of us will never be able to get a stablecoin directly from its issuer or redeem a stablecoin with its issuer. But there are millions of people who can hold USDT, hold USDC, hold the forthcoming Ripple stablecoin, who knows what jurisdiction they'll be in real DeFi ecosystems. That's the difference.
Consider the pilot programs with digital currencies. In Hong Kong, banks are gearing up to deploy CBDCs that integrate seamlessly with blockchain technology. Ripple's role in these pilots is pivotal. With its asset-neutral XRP, the technology promises to settle transactions in real time, reducing friction and boosting efficiency. When banks like Fubon and DZ Bank integrate these systems, they aren't just experimenting. They're laying the foundation for the next generation of financial services. Yet the road ahead isn't without controversy. There are skeptics who question the long-term viability of these digital solutions. They worry about security, regulatory oversights, and the inherent volatility of crypto assets. But when you look at the track record of institutions like Citibank and the strategic partnerships they're forming, it becomes clear that these aren't baseless concerns. They're challenges to be met head-on with innovation and resilience. In the midst of all this excitement, let's take a moment to step back and look at the bigger picture. The technology behind Ripple isn't just about faster payments. It's about redefining the very nature of trust in the financial system. With traditional systems often bogged down by bureaucracy and inefficiencies, blockchain offers a transparent, decentralized alternative. It's a system where every transaction is recorded, immutable, and accessible. A system that embodies the principles of fairness and efficiency. Looking ahead, what can we expect? As banks continue to adopt and integrate DLT, the pace of innovation will only accelerate. The infrastructure is being laid out now, pilots are turning into production-ready systems, and with major players like Citibank on board, the market is poised for explosive growth. Soon we might witness a financial ecosystem where digital assets are the norm, where traditional banking melds seamlessly with cutting-edge technology, and where institutions are no longer measured solely by their legacy systems, but by their ability to innovate.
DZ Bank, with an impressive $459 billion in assets under management, is taking a significant leap forward in the financial industry by initiating a pilot phase for direct cryptocurrency trading for retail customers later this year. This initiative, spearheaded by Sawad Benkreda, a board member overseeing capital market transactions, aims to bring Bitcoin and other digital currencies like XRP closer to private clients. In an interview with Bloomberg News, Benkreda highlighted the departure from initial plans to collaborate with DWP Bank, choosing instead to partner with a yet-to-be-revealed new entity. The service is designed for self-directed clients and will feature a diverse range of cryptocurrencies, signaling a broad and inclusive approach. According to a cooperative association study, every second cooperative bank is keen to offer this innovative service to its customers, although the decision will ultimately be made by each bank independently. This bold move by DZ Bank, a key player in the cooperative financial sector in Germany, stands in contrast to the more reserved stance of German savings banks on cryptocurrency trading.
In wrapping up, remember this: every innovation, every pilot program, every partnership is converging towards one undeniable truth. Financial institutions are no longer content with incremental improvements. They want a radical overhaul. And when a giant like Citibank flips the switch on XRP, it's more than just a business decision. It's a signal to the world that the future of finance has arrived, and it's digital, dynamic, and downright disruptive. Every headline, every pilot, every whispered rumor in boardrooms across the globe points to the same reality. Banks are adopting distributed ledger technology, And Ripple's XRP is at the heart of that evolution. Don't miss a beat of this unfolding story. Hit that like button, subscribe, and tap notifications so you're always in the loop. And as always, share your thoughts in the comments. What does this mean for you? How do you see the future of finance evolving?